What's up, traders? Welcome back to Explain the Charts. Today, on October 21st, 2025, we are diving deep into Bitcoin after an incredibly volatile week that saw a major crash and a significant rebound. We have a lot to cover, from major market-moving news to a granular look at the price action across multiple timeframes. So, is this the start of a new leg up, or just a bull trap? Let's start with the news that has been shaping the narrative. First, the big story from last week was the crypto crash that wiped over $100 billion from the market in just a few hours around October 17th. This was attributed to a mix of high volatility, leveraged liquidations, geopolitical tensions, and even some large bearish bets from institutional traders. Bitcoin itself sank to a 4-month low, briefly touching prices near the $105,000 mark before finding its footing. However, the market sentiment began to shift yesterday, October 20th, with reports of a strong recovery. Bitcoin managed to reclaim the psychological $110,000 level and even pushed past $111,000, leading a broader market rally. A major tailwind for this bullish sentiment is the widespread expectation of a Federal Reserve rate cut later this month, on October 29th. Analysts predict that a rate cut would weaken the US dollar, making assets like Bitcoin more attractive as a hedge. On the institutional front, the news remains cautiously optimistic for the long term. BlackRock launched a physically backed Bitcoin ETF on the London Stock Exchange, specifically for UK institutional investors, signaling continued, steady adoption. We also have major network developments on the horizon, like the Stack's Satoshi upgrades expected in Q4, which aim to unlock Bitcoin for DeFi applications. However, it's not all positive, as some reports highlighted $17 billion in losses for retail traders betting on Bitcoin-related equities like MicroStrategy, showing the risks of leveraged exposure. The Fear and Greed Index is also sitting in extreme fear territory at 30 out of 100, which can often be a contrarian indicator that accumulation is happening. Now, let's see how all this news translates into the price action on our charts. We're starting here on the daily chart for BTCUSD to get the big picture view. Looking at the full daily chart, we can see the strong uptrend that has been in place for most of the year, culminating in a high around $126,000 in early October. What followed was a sharp and aggressive correction, which perfectly aligns with the news reports of a market crash. The most critical area on this chart is the support zone that was established during that sell-off. Let's zoom in on this recent action to get a better look. Here we can clearly see the price action from the October 6th high. Notice the significant red candle on October 10th, where the price wicked down to a low of about $103,300. Then again on October 17th, we saw another test of this area, with a low of $103,500. This price action has firmly established the $103,500 to $105,000 zone as a critical support level. Sellers tried to push the price below this level twice, and both times buyers stepped in with force. Following that second test, we saw yesterday's very strong bullish candle on October 20th, which closed well above $110,000. This candle shows significant buying pressure and confirms the rebound that the news was reporting. The battle is clear. Bears are defending the downtrend from the recent highs, while bulls are defending the $105,000 support with everything they have. The immediate resistance to watch is around the $112,400 to $113,000 area, where the price has previously struggled. A convincing break and close above this level on the daily chart would be a strong bullish signal. Now, let's switch over to the 1-hour chart to analyze the short-term trend. Here, we can see that V-shaped recovery from the lows around $101,000 on October 20th in more detail. The momentum was incredibly strong, pushing the price up over 10% in a matter of hours. After topping out just below $112,000, the price has entered a period of consolidation. It has been trading in a range between roughly $110,000 and $111,500 for the past several hours. This type of consolidation after a strong upward move is often bullish, suggesting the market is taking a breath before its next leg up. The key for the bulls is to hold the $110,000 level as new support. If we start seeing hourly closes below that, it could signal weakness and a potential retest of lower levels like $108,000. Conversely, a breakout above the consolidation high around $111,800 would be a very positive sign for short-term continuation. Finally, let's zoom all the way into the 15-minute chart to see the price action over the last day. This micro view confirms the range-bound trading we saw on the hourly chart. We can see multiple tests of support in the $110,000 to $110,500 area, which have all held so far. The resistance is clearly defined around the $111,500 to $111,800 zone. This price action is forming a classic rectangular or channel pattern. Traders are now watching for a breakout from this pattern to signal the next immediate move. A breakout to the upside would target a retest of the $112,000 level and beyond. A breakdown below the range support at $110,000 could lead to a quick drop toward the next support around $109,000. The volume within this range has been decreasing, which is typical before a significant breakout. Pay close attention to a surge in volume, as that will likely confirm the direction of the breakout. Now let's go back to the daily chart to summarize our findings. Alright, to recap everything we've looked at. Bitcoin is at a pivotal point, having strongly defended a major support level. Let's lay out the key price levels one more time. Your most critical support is the zone between $103,500 and $105,000. A daily close below this would be extremely bearish. The immediate, short-term support to watch is $110,000. On the upside, the first major hurdle is the resistance area between $112,000 and $113,000. Clearing that opens the door to our next major resistance at $120,000 and ultimately a retest of the all-time high around $126,000. So, what are the potential scenarios? The bullish case, which I would give a 65% likelihood, is that the recent crash was a successful test of support, shaking out weak hands. With the positive news of a potential Fed rate cut and the strong technical bounce, the path of least resistance appears to be upwards. A break above $113,000 would reinforce this, suggesting the primary uptrend is resuming. The bearish case, with a 35% likelihood, is that this rebound is simply a dead cat bounce in a new downtrend. If the price gets rejected hard from the $113,000 resistance and then breaks below $110,000, the bears are back in control. A confirmed break of the $105,000 support would be the ultimate confirmation of this bearish scenario, with a potential target near $95,000. The most important thing to watch in the coming week is the Fed's interest rate decision on October 29th, as this will likely be the catalyst for the next major, sustained move. I hope this in-depth analysis was helpful for your trading strategy. If you found value in this video, please hit that like button, subscribe to explain the charts, and ring the notification bell so you don't miss our future updates. Finally, a quick reminder that this content is for informational purposes only and is not financial advice. Trading cryptocurrencies involves significant risk, and you should always do your own research before making any investment decisions. Stay safe and happy trading!